Oh, hey, there we go. We're actually live now. Who do we got here? Marine Corps Brat, Simon, and DD214. Give me a second here. I'm running over a couple things. Man, we've got an exciting day in the market. Let me tell you. Everyone sees red, and it's like, oh no, everything's bombing. No, well, there's a chance to make money. And let me check all this out here. Okay, let me take off some of the work stuff here. It's cold outside, it's warm in here, so yeah, there's a second day, still getting used to using the equipment, using the software, so mistakes will be made, and the stream will just get better, as I learn, as we grow. Let me get all my desktop here. Yeah, I saw the first stream. Marine Corps Brat was the double first. So what are we looking at here? Okay, so we ready to get this party started? So looking at it, we had a pretty good dip during the open hours, and I'd actually I was listening to the ticker, I was listening to the prices run off, and I heard the drop, so I had to go ahead and look. During last night's stream, we were talking about the bull put spread, and I wanted to I shouted that out during the chat because there are always opportunities to make money, whether the market's going up or the market's going down. And I saw an interesting window open up there. So we're going to switch over to puts here. And I believe what I called out was it the 35, 34s. And you can see they're already turning back around. Or wait, let me double check. I think I've actually got the text saved here, or the message that I put up. Yeah, we were looking at the 35-36 December, not this week, but the following week. Because remember, when it comes to this week, we've got a day and a half less trading going on. So we don't want 3 days out. We want to jump to the 10 days out. Let me go and close this other. Going to close these up. I got to remember to put it in a place where y'all can see it. And we're going to tighten this up. We don't want all of them. We're just going to look at 10 spread. No, let's do a 20 spread. That way we get 10 up and 10 down from our current strike price. That gives us a nice window to operate in here. So we were looking at the 35-36s, and when I posted that, we were actually up at 24. I did not get in on this, but I thought it was a really good entry point. We were talking about entry points and exit points yesterday. Hey, Pringleton's in the chat. Welcome, Pringleton. We're talking, and you can see from the time I posted it was already at 24 cents per share, $24 contracts premium. It's dropped down to 18, which isn't terribly bad. That can be indicative of support coming in because these chains are built out based on where the price is moving, where the price is, and how long is left on them. So if support starts to step, hey, Danelle in the chat, when the prices start to change, when people step in, when volume increases, when support starts to get built, these numbers of course will change. So that beautiful 24 window, the price still looks to be falling just a bit, but the volume might have stepped in and we get enough open interest, volatility, we get enough pressure coming back in to where it kind of negates that volatility. And those are some of the things you got to look at. It's not just, stock prices go up, stock prices go down. I don't know where Clay is, Simon. It's, I spend the day in his chat and, I'm not whining or anything, but I love it on the Clay Bro channel. He's awesome. I liked asking, certainly I love getting advice. He knows, this is a very new channel. We're only on our second live stream right now. And we're getting a little bit of, A little bit of change on the 33, 34, but you can see how these changed throughout the day. Actually, 35, 36 at 24. No, I read that wrong. So we've actually gained a little bit from the fall in the price. Clay is eating and putting in more hair gel. 214. Yeah, I'm not sure there was time enough for notification. I literally, when I was putting the looking for, be on the lookout for, I was actually on my way home to start my lunch. So looking at it, the original post I did was on the 3536s, which was at $24 for the bull put spread. So with the stock prices dropping down just a bit, yeah, thank you, Danelle. Don't forget the like button, subscribe, share on social media, get the word out on this channel. We've actually gained an additional $2 in value. Oh, Corbett did get the notification. Oh, okay, I read that wrong. Reading in a hurry here because, lunchtime, I've only got an hour. We've only got so long to cover the information on here. Clay didn't send Q notice. Didn't send Q, or didn't send a notice. He did say it during the wrap up when he was thanking everyone for coming, getting names in the shout out. He did mention that the live stream was going to be going on after his chat, or after his live stream. So we've still got a pretty decent window here on that bull put spread. Now this is not financial advice, of course. I'm just trying to point out things that you can look for, good entry points, good windows to get in to make a little bit of money. Because let's face it, if you had $400 lying around and entered in, put in 4 contracts, put your $400 up, you've got almost $100 of premium you're sitting on. Now granted, these are 10 days out. This is not this week, but it is the next week. And okay, we're still on that side of the chat, so I'm gonna scroll up just out. What do we got first in the chats today? First to like both, smash that like button. That's why you got the blue wrench, Marine Corps brat. That's why you got the blue wrench. So I kind of want to scroll up here. Let me get those 34, 35s in. Why is this so wide? Oh, I can't shrink that anymore. I'm going to slide this over because I've got multiple windows up on the stream right now, so it's kind of hard for me to see all my own information here. So we're looking at those 35, 36s, and if we scroll over to check the theta, you can of course see at current 35, 36s theta. So you're not losing quite $1 per strike. You got to remember, because thanks for hey, no problem, Simon. Like I said, I'm going to try to do these every day. I'd like to, get these options updates out there, just like in the stream. Trying to get the numbers out, but I can certainly get a lot more in with these videos than I can simply just typing on the screen, because you are limited by characters, and I don't want to, flood his stream unnecessarily, because we have a lot of other members in his chat asking good questions, bringing up vital information, good information to get out to the community. So this being, and I even asked Clay, hey, do you have a problem with being a parent channel? I view this channel as kind of an addition to Claybro's stream. This is touching base on part of the aspect of trading that doesn't get mentioned as much in his stream. So yeah, it's Daddy Claybro. So we're going to jump back over the chart real quick. And as I mentioned in the chat, if support holds up, it looks like we are actually getting a little bit of support here. Now, we don't know, it's going to move up. We're going to see if it tests, if it dips back down. So we're looking at, what do we got here? Right about 38.60 as a level of support. So we could see a retest this. It could come back down, tag this. If it tags again and starts running up, then that would confirm that this is a good entry point. I don't remember what point we were at. Looking at the timeline, I'm guessing we were probably in this area. It came down, it bounced back up, it tested again, and it did run through, did break through. Granted, that wasn't a hard level of support, but it was something to look for. And now that we're coming down again, these 2 big red candles, that is a lot of downward pressure. But you see those 3 beautiful greens? Somebody stepped in on our behalf, and that is gorgeous, of course. And what do we got here? RSI, what are we sitting at? Still fairly low on the RSI, so we still got plenty of room for upward movement. I don't know why my RSI zoomed in. Usually I've got a nice little 30-70 bracket going on there. As you can see, there is your step down right there, and it looks like we are setting up for a crossover. A little bit of pressure stepped in, and we're looking to push back. Okay, we got a question here from FrankCFV. On a lot of these, when you get on your brokerage and you enter in, a lot of times options will be locked, and there'll be a questionnaire they'll want to know, about your risk tolerances. How much, how much risk can you accept? Do you understand that, because of the expiration, options can tend to be an all or nothing. If you ride these to expiration, you either win or you lose. And that's why yesterday I touched several times on knowing when to get in or out. Simon, RSI is your relative strength index. It just tells whether a stock is overbought or oversold. Meaning, if stocks like to breathe. You can run up, and you'll see it in the charts. It'll run up, tag, and then it'll drop back down a bit. That's a stock taking a breather. A stock can get tired if it's running, and it needs a little bit of a pullback for the market to kind of not only to evaluate where the stock is, but also for it to accept it. You always hear that, when it dips down and it does a multiple test, that is the market basically working to accept the price. RSI kind of tells you if a stock is overbought, that's technically, you would see your RSI rise above 70. If a stock is oversold, if it's getting pushed down, like we're seeing now, you see this RSI, dropping below 30. We're right below 30 right now. We had a little bit of upward pressure, so relative strength, we gained strength. That was buying pressure coming in. Well, thank you, Marine Corps Brat. That is a high compliment, because there are so many traders out there that are technically better traders. Their technical analysis is a lot better than mine. I don't know the names of all the candle formations and everything, but I can see, I look at the MACD, I look for the crossover. The crossover is the change in your trend. If you look, it was a steady push. We had our separation, which MACD is your moving average convergence divergence. Is it your moving average converging, coming together, or is it diverging where it's splitting apart? So the MACD, when you see those crossovers, a MACD crossover with a change in your RSI can be a signal for your purchase coming in. Now, if you look, we got that push down. I said we would see a run up, and we'd possibly see it would turn back around and take a test again. So if you look, we tested, and the next time it came back in, they suck at explaining with silly Southern girls like me can't explain. Well, hopefully everybody in here can understand. I say everybody just like everybody else. So we did see it ran up a bit, tagged, bounced, came back down. It's retesting, and we're getting our green candles again. So, you always hear them talk about the W. Yes, very simple explanation. It tells if stock is oversold or overbought. Yeah, that's pretty much what it comes down to. So this is, you always hear them talk about W's. A W is a double bottom test. So it came down, it hit, it bounced up, got a little bit of buying pressure, came down, tested again. But when it tested again, it didn't go quite as far. You also hear people refer to the cup and handle. Well, this isn't the best example in the world of it, but a W, you dip down, you come back up, and when you come back down and test again, you don't get quite as far down. So you got your nice little cup, it tags, and your nice little handle, so you could actually see pressure starting up into a full-on W. I see Marine Corps Rat, yes, what is the W? Some people explain RSI as ratio driven, blah, 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 blah. Yeah, everyone has their own way of explaining it, and most of them are good. Most of them are good explanations. It's just like, good Lord, you lost me at ratio. Yeah, it just the RSI relative strength index. It kind of is your ratio, how much buying pressure versus how much selling pressure, and your buying pressure gets high to the point where selling pressure's got to step in just to relieve some of that pressure, because if you buy, eventually you're going to run out of money. So there could be day traders, swing traders coming in, and they could be adding that little bit of selling pressure. But it comes down, and this really comes into you'll hear him talk about high frequency traders. And those are the guys who they'll grab, 2 cents at a time, 4 cents at a time. They really just want to get in and out real fast and keep. Where can you see RSI and Webull? Yeah, I'll show it just here in a second. They want to get in and out as fast as they can and get those little fast gains here and there, because just like the death of 1,000 cuts, they want to bleed them faster. All these blue names love it. Yeah, wrestler. Hey, if we get up to, I put out in Claybro stream, we get up to 100 subscribers, I'm looking to add another blue name in there. Using big words. Yeah. So if we're clicking in here, they got this cool little chart icon up here, and this is where you can turn on your indicators. So as you can see, I like to get the moving average, the MACD, and the RSI. Those are the only ones I like to run. You can add in volume, of course, if you want to see, is more buying pressure or more selling pressure sticking in or stepping in, buying, selling pressure, buying pressure. Yeah, you see a lot of that represented in the actual candle chart of how it's running. So it is an extra one. You can put that on there. Nothing wrong with not having it on there. I just kind of prefer to keep it a little bit cleaner. Now, also some excitement today. I don't know, anyone in there happen to see what's that stock, that prog that people have been talking about? So I stepped in on some prog today and took a shot. I'm down a little bit right now, but I really do think we're going to see a reversion on prog. I got a rather sizable, since we were on the chat last night and we looked and saw, and the market did not accept that. Horrible red candle stepping in. I did step in on some more prog calls. Since last night in the chat we looked and saw those prog weeklies got built out. I was like, okay, well, those prog weeklies are in. I did end up collecting my dividends that I mentioned last night on the USOI. I got my dividends collecting on those, and I did close out, so I am no longer in any of the Credit Suisse. They were paying out too high dividends, and they could not maintain their share price. Credit Suisse, they had GLDI, which was gold, SLVU, which was silver. I think RELM was real estate, and USOI was the crude oil. Those were exchange-traded notes, ETNs. They're somewhat similar to an ETF, but they deal more with doing covered calls against the underlying asset, being gold, silver, crude oil, or real estate. So I got out of those positions. They're paying such a high dividend that they couldn't support their own share prices, and they kept falling. And it's nice to get the dividends, but in the long run, you're losing out because it can't hold share price. There's no point in collecting a 14-cent share price per month on a stock that falls 16, 18 cents per share. It's not manageable. So yeah, this is just painful to watch. Now on the flip side, we're talking about those covered calls that I sold last week. And if you remember in the example yesterday, we were talking, the market closed out and those were valued at $63 per contract. So we're going to go up, we're going to drop the 10 down here, open the 3 back up, and we're going to go calls only. So my covered calls, oh no, we want single here. So I sold the covered calls at the $45 strike price, collected $63 premium, and we were looking at theta. Now yesterday, I don't remember the exact theta we were looking at, but as you can see, the theta has dropped just because, just like anything else, when you move away from the actual strike price, the theta can change also. So the theta is now at $8. I think yesterday it was, I think at close it was like 14 or 16. I think it might have been 15 and a half cents per share. We are now down to 8 cents per share. But if we scroll over and look, we were looking at, 63 yesterday. Well, what was better, 63 yesterday or 48 today? Well, we've totally blown that 48. This downward trend we're in right now, those contracts, the value of them has gone down so much. We were looking at, possibly end of day based on nothing else changing in the market of being at 48. You look at the price now, it's at 17. That is a huge gain. That's why these covered calls in a bear market, when they start pushing the price down and you got covered calls, you're making money hand over fist. Every contract, I'm going to go ahead and open it up, look at it real quick. I'm currently at 81% profit on every contract I have. That is glorious. I could close these out right now, but I still, like I said yesterday during the live stream, I want to run these out, and I want to go ahead and actually close these out. Close these out tomorrow. I might lose out, on a little bit of premium. I don't want to run these to expiration. You can run them to expiration, but locking in profits earlier, I'll give up, if these run down to $10 or $12, I have no problem with, paying $10 or $12 per contract to close these out. Like I said, when you're getting into cover calls, know your outs. If you're running a stop loss, 25%, 30%, make sure you maintain the capital to close those out if it goes sideways. So rather than paying a 30% loss, I have no problem with closing them out with 80 or 90% profit. I'll pay back the 10 and I'll free up my options contracts. And once I free those up, we can of course look at next week's option chain. So looking at it on the call side of the house, Marine Corps bad. Hearts from Wrestler. So looking at next week's chart, we haven't really, am I blocking? Okay, I'm not blocking too much of it. Looking at open interest, there really isn't that much open interest right now. We have 20 open, so we're 10 up, 10 above the current strike price, 10 below the current strike price. I don't know what the 50s are. Let's go ahead and expand that out just in case anyone's interested in those 50s. So 50 open interest, yeah, we're not even up to 5,000 yet. This is, and a lot of these contracts will come in because this is not monthly, your monthly options. These are weekly options. A lot of people won't be stepping in until later in the week if they're going to be getting their contracts, or they'll start when the chain opens up on Monday. So you might see these numbers increase as we get further on into the week. Friday being a half day, we might see some people step in. They might look at the options chain for next Friday and say, hey, yeah, there's a good window, especially after the push down we're on right now. These numbers could change quite a bit, and we might see a whole bunch more volume. Lately, we've been seeing between the 45 and up, down 44, 43. We've been seeing a lot of increased options contracts coming at that range. With this push down this week, if it continues through the week, we'll actually see more from 45 down into the 37, 38 range. Right now, looking at this, 39 to 36, there's hardly any interest at all right now because a lot of people are going to wait and see what's going on. Wait and see where we're going with the options chain going in next week. So this will fill out more, and you can pop in, look at these numbers anytime. These numbers will not change after hours. Once the market closes, these numbers will be locked in. So you can pop in anytime and see what the day closed out. Because I know when you go over to the chart, of course your candle chart, this will continue updating all the way through up until after market hours close, and then it'll kick back up again when the pre-market hours start. Well, your options chain will not change during non-market hours. So that'll always be locked and you can always reference there. So do we have questions in the chat? While any questions are going, I'm going to, yeah, all that red. You know, it hurts. Your portfolio's red. You see it going down, depending upon how sizable your position is. I haven't really looked at the rest of the market, but you could see, you know, whole bunches of change in the market. You're red. But that's why things like covered calls, playing some of these options that help you when the market's down. It's nice to know that when the market turns around, goes back up, and stabilizes, you were able to get a little bit of extra money during these downward trends. But I'm going to pop over, look at Prague real quick. Simon saying everything's good. Yeah, Prague again, like. Yeah, I entered in, so I actually have two different call positions in Prague right now. Not financial advice, not endorsing a stock. Looks like, you know, came up, changing pressure, and we had it ran back down, actually touched a little bit lower. So we did not get a cup and handle. That was AMC we were looking at the cup and handle on. Got a whole bunch of different things going on here. So let's look at since we're on Prague here. Oh. Yeah, sometimes you have to not be scared. You know, it's all down to risk versus reward. And let's see. So much data going on right now. So yeah, it's looking at the Prague options chain. Now Prague, because it's not as built out, playing the low end can be a little bit trickier. Let's jump over to puts and we'll do our vertical here again. I like single, I like vertical. These are some of the best ways of running contracts here. And again, now if you look at these, remember we said you have to put up collateral. Your collateral is the difference between the two different strike prices. Well, since these are only 50 cents apart, your collateral here is only $50. So if you're looking to run bull put spreads, you know, against Prague, no open interest. Now, see, you're going to be dealing with low volume, so not sure how much you're actually going to be able to. You may not be able to get fills that low. Yeah, look, the volume on contracts right now is super, super low, and we're of course on the 10-day. So these are for next Friday. If you're looking to get in for this week. You get open interest is still down on the lower volume bound. We're looking on the bull put spreads. You got volume at the 3 to 3.5 and the 5 to 5.5. You got a nice volume channel in there with the 3.5 to 4 being the strongest level, most liquidity for getting in and out. Now, of course, there's not much time left on these. Again, these would be $50 collaterals you would have to put up. The 3 to 3.5s don't look that bad for a bull put spread. But if you look, I don't know if this is a typo, that it's actually the sell order entry is at 0. Now, a lot of times when you run into a stock that's lower valued, you will not be able to get in. Yeah, Wrestlers are red. Hey, I'm red today too. Full transparency, I'm down almost 8% on the day. But until you sell, they're just numbers on a screen. And if you can stand looking at it, if you can keep a level head, you know, don't worry about how red you are. It only matters if you're red when you close. So looking at it, because of the spread here and how tight the numbers are, how low the share price is, your entry would either be at $5 or $10. A lot of times your brokerage on something like this, they will not let you enter in a position on odd numbers. Like you get higher up, you might be able to enter at 63, 64. When you're down low, they're going to tell you flat out, no, you got to do increments of 5. You got to do a $5 entry, a $10 entry. So it does kind of limit how you can get in. And let's see if the same holds true on Here, yeah, again, you're looking at those 5 and 10s. I know I got in at a divisible by 5 entry point. It was already there, so I didn't have to haggle over prices. I got my fill almost immediately. Not going to specify where I got in at or how large of a position. I am down though. I will let y'all know that. Everyone who bought in, unless you bottom ticked, and we'll get back over to the chart. Yeah, we're still pushing down. So anyone who did not enter as of this candle right here, which is still closed down. If you got in on the bottom tick, the absolute bottom, yeah, you're up right now. Everyone else who entered in, you're down right now. Just if you don't like seeing the red, just turn off your brokerage for the day. You don't have to stare at the charts all day. Simon, he may not have actually done anything. It just might have been, we're all invested in AMC, so when everything gets pushed down, of course, your portfolio, as soon as dips down, your red day. Where did you start the day? Where are you at right now? Well, you're going to be down from where you started the day at. That's on a day like this. Sometimes you just don't have to look at the screen. If you're red, just go about your day, go get something to eat, get yourself a cappuccino, try to relax, have a good day. You don't have to stare at your tickers all the time, unless you're actively day trading or swing trading and you're trying to bottom tick or top tick. If you plan on holding my AMC contracts, I don't plan on selling those till tomorrow, so I really don't have to pay attention. Listening to the stream, they call out. They call out where the current price is. Okay, well, if I don't hear them saying they're up to $40, up to $45, I really don't have to pay attention, because immunity to the AMC drop. Yeah, that's part of holding. Don't worry about what the stock is doing. Yeah, you're gonna have red days, you're gonna have green days. Sometimes, if the day's too red for you, to turn it off. Don't pay attention to it. But my covered calls, I know I want to get out of them tomorrow, so I'm not worried what the price is doing today. In my instance, yeah, I look in portfolios horrifically red, but I'm not selling, so it doesn't matter. Oh, everything I have is red today, but I stay positive. And to know that's a great way to look at it. I held AMC when it rose 25 in January, down to 5, then up to 35, 75. Yeah, 20. Yeah, it's you get used to it. It's gonna move around. The important thing you got to realize, have the hedge funds covered? No, they have not. All those short positions are still out there, looking like Prague's getting a little bit of a bounce back here. That's always nice to see. But yeah, don't let the down days get you down. Just stick to your trading plan. And if you're diamond handing AMC, your trading plan is simple. Have they covered? No, keep holding. If you're sitting on a little bit extra cash and you want to enter into some other positions, want to enter into other stocks, enter into cryptos, enter into options trading, any chance you get to make yourself a little bit extra money, go for it. So it looks like we're leveling out here a bit. And the level out, plain covered calls, there's no problem to level out, because if the stock is trading sideways, you're burning theta. The stock, you can buy your covered calls, and the stock can move sideways for the entire week, and you're going to continue to gain value, because all it does is burn away that theta value, burn away the amount that you're going to have to pay to close those out. And we are catching a nice little. Looks like we're like, no way 38, no way 38. We are turning around a little bit here. We might have caught this nice solid dollar level of support here, turning around and bouncing off it. Yes, I mean, that's before I was all grumpy every time AMC dropped. Now I don't care. Yeah, because it comes down to have the shorts covered. I am kind of curious right now. I do have, hey, yeah. So yeah, there is green in the market. The market's not completely red right now. Your major indices, the SPY, the Q, they're both down a pretty decent amount right now. We can actually pull those up just real fast, just for if there are any audios out here. We are catching a little bit upward. Now keep in mind we are on the 1 minute chart. So we do see a little bit of pressure coming back in. SPY's bouncing back, but look at that nice little ski jump right there. Get to the bottom, bounce back up. And it's much the same on the Qs. On the Qs, you're seeing the same thing. It hit the ski edge, ski slope went down, shot back up, going back down. It's a downward roller coaster. That's why, I'm sure there are day traders, swing traders who are just looking at their profits. Depending upon which way they're playing it, they're looking at it, and it's actually just horrible. We're going to look at the IWM. This is the Russell 2000, which AMC, if you've watched Matt Core's stream, he has the IWM up. It is the home of the AMC, and the AMC is the largest stock within the IMW or IWM. So you can see, same thing, they're all following the same trend. Now I know even if the price drops to $5, short sellers still have to buy back in cover, which bump the price back up higher. Yeah, we're only going to lose if people sell. And at $5, I would never, it would be so painful to watch it go down to $5. I know they would still have to cover, but it'd be painful to watch because I would be trying to get every bit that I can to buy as many shares as I could. And if it dropped down to $5, I would be doing some long calls on it. I'd be doing long calls at the $20, $30 mark and pushing them out because I know it wants to run back up. That's actually a very good point to bring up. If they push it down now. A lot of people say, oh, well, AMC's not valued at that. AMC's not worth that much. You shouldn't be paying attention to that. Those naysayers. When was the last time AMC was below this 28 mark? I mean, look at it. They're like, oh, it's overvalued. The stock's not worth that much. I beg to differ. Look at this chart. We've been over the 28 mark since before the 72 run up. To people who say that those are your fudders right there. The fear, uncertainty, and doubt. AMC right now is showing that because of the support it's received, and it's not going bankrupt. That's I peek over, I see about it going bankrupt. It's not going bankrupt. If you look at that, we are not going to be pushed below that 28 mark. I do not see it. That's why if it did run down and tested 30, I'd be loading up on bull put spreads because they've tried it before. They tried pushing us down, double tap, fail, run up, came down a little bit, higher lows, pushed back up. We had that beautiful bull run again. Knocked it back down. Didn't even make it back down. Didn't even make it down to 30. Let's zoom in on there. Did not even make it down to 30. I mean, how much... This is a good question for everybody. How much did the hedge funds and the shorters spend driving us down to this 28? They lost so much money. I saw an article, I didn't do any DD on it. It was a nice piece to look at, beautiful piece, beautiful headline. And it was talking about, how many billions of dollars have they lost this year trying to short this stock. They've thrown so much money at it, and we're not going away. So yeah, if we did see a push down, closer, into the mid 30s, into the low 30s, I would be loading up on bull put spreads because I know that when we bounce back, those are going to start printing, and they're just going to be printing more shares of AMC for me. So looking at, Mr. So Simon's quite vocal in the chat. Danelle, everything read. I know I missed some of these. That's why I'm going back and reading some of them. Yeah, never invest more than you're willing to lose. Delia Claybro says that. That's one of the things. I don't remember if I touched on it last night. But when you're looking to enter into these, when you're selling covered calls, you are putting your shares at risk. I have been exercised on covered calls before, and I had to buy back in later on. I did end up making money buying back in, but I don't want to give any of my shares up. I don't want to give a single share up. Certainly not 100 at a time. Because if the MOAS happens, if it starts to run away, well, then you're buying back in at whatever the market is as it's running, and then you turn into one of those chasers. And they always say, don't catch a. Matt Kors actually says this: don't catch a falling knife, and don't catch a launching rocket. If you're chasing right there, chasing is bad. So when you enter into these covered calls positions, not financial advice, but you're kind of safe if you're risking 25% of your position. There's nothing wrong with that. If you're sitting on, if you're sitting on 400 shares, well, you can take 25% of that. You can enter into a covered call contract. The fewer shares you have, like when you hit the 100, and that's what you see people. I have some people in the chat, and they're talking about when they get up to 100 shares. The 100 share mark is great because you can start doing covered calls. It is a super risky position, in my opinion. That is where you certainly want to make sure that you've got that capital standing by, know where your stop loss is, because if you've got 100 shares, if you've got 104 shares, 105 shares, you're risking a huge chunk of your position. So having that out already established, knowing your trade plan, when to get out, that is important. When you've got, when you've got enough to where you can enter 2 and 3 contracts at a time, 4 contracts, 10 contracts, and that's only a quarter of your position, yeah, you can get a little bit riskier. Still, know where your stop loss is, know where your out is, because MOAS happens, you may want those shares back. Depending upon how many shares you have, granted, if it rips up to 1,000 a share, 1,200, 1,500, and I know people will talk about 10,000, 100,000. There are mathematical channels out there that say, yeah, AMC to 100,000, AMC to 500,000. Yeah, it's mathematically possible, but I'm not giving any price predictions. I view the 1,000, 1,200, 1,250, 1,500. I think that's a more realistic range. Those are certainly some of the ranges that I'm looking at. And when the MOAS happens, I will actually be doing a step out. A portion of my position, I'll be stepping out in percentage increments of my position as it runs up higher and higher. Just because locking in those profits. If we run up to 1,000, it'd be nice to take 10% of my position and close those out, and watch it to run up to 1,250 and take another 10%, and watch it run up to 1,500 and take 10%. There's nothing wrong. You have to establish your own trading plan, and a step out like that is protecting yourself, because if you drop 10% of your, you close out 10% of your position at 1,000, and everybody else in the market loses their mind, and it runs back down, and you're stuck holding at 50 again with 90% of your position, well, at least you did take profits on that run up. And depending upon what your size is, 10% at $1,000 a share, that's a pretty sizable position. Even if you're only holding 100 shares, and it runs up, and you decide, okay, I'm going to take 10% at 1,000. That's $10,000. Granted, that may be a very small. We're talking about people with only 100 shares there, but for them, we talk about life-changing money, especially in Clay's channel. He talks about hitting that life-changing money. For some people, being able to pay off debt, pay off their car. If you've got a car and your car payments are a couple $100 a month, well, if you manage to pay that off, that's a couple $100 more you can be throwing into the market. Okay, let's see. Booming, not bankered. Yeah, Simon, AMC Theaters, and we've seen that they've been working towards paying off their debt. And when they're paying off the debt, that definitely tells you that they're moving the opposite direction from bankruptcy. Because bankruptcy, they're stacking debt on top of debt on top of debt. If they're paying off their debt, they're not going bankrupt. No matter what the hedge funds do, they're not going to be going bankrupt. Okay, Simon, covered calls and covered puts, you only buy them when you own the stock. 100 shares. Wait, let me read. Covered calls and covered puts, you only buy them when you own the stock over 100 shares, unless you're willing to buy the 100 shares to cover. Am I right? Yeah. So the covered call is when you already own them. That is on your upside. You already own the shares. You already own a 100 share block, and you don't buy the covered calls. You sell. With covered calls and cash secured puts, you are selling them. That's why you collect the premium. You buy your calls and puts are when you pay the premium price for the right to purchase those. But when you're doing covered calls and cash secured puts, you are actually the seller on that side of the transaction. And yes, selling covered calls is where you have the 100 shares. Selling cash secured puts. Let's go ahead. Sorry, I just like the 1 minute. So AMC share price right now, we're at 38.44 looks like. So say you had the money and you wanted to go ahead and do cash secured puts. Say you were sitting on $3,500, and you're looking at cash secured puts for AMC. We're already on puts. We're already on single. So if you had $3,500 you were sitting on, and you're like, I want to go ahead and get myself some cash secured puts, and I want to collect a little bit of premium. That's a pretty decent volume, right? Or open interest, 12,000 open contracts right there. You could be on the other side of that. But looking at it, at the 30, if you had the 3,500, yeah, you'd collect $27. Let's might be faster. Jumping over, let's go a week out. Let's go on the 3rd, the Friday of next week. Now you're up to same contract. You know, you're still looking to buy. You got the 3,500. Now you're collecting $95. So you get substantially more. That, of course, a lot of that comes in on your theta. The further out you go, the more time that's involved. Okay, well, 10 days out. Let's jump 17 days out. Let's see that little bit extra before Christmas. And when you enter into a cash secured put, that 35 is locked up until you close out the position. Well, now, okay, well, you're earning $124 right now. So yeah, and the great thing is, if you plan, or wait, no, I was on the wrong one, $159. So if you plan on and cash secured puts, you can lock those in and never touch them. You can just let that sit, and if it happens, it happens. We all know that the price, I showed you earlier when was the last time they dropped us below 28. Well, if it does run down, you get exercised. We know the price is coming back up, and it goes back to the whole thing of averaging down, averaging up. If you believe in the MOAS, which I do, if you believe that the shorts have to cover and the price is going to shoot up, which I do, then your entry point, getting the 100 shares doesn't really matter much. What it does matter is if you look right now, you would collect, if you did this for the December 10th, you would collect $159 premium. You collect that right now. Well, let's go in. So if you had $159 right at $160, you could technically go out today and buy another 4 shares. You just upped your share count. And if it dropped down to 35 and you got exercised, say a battle really developed and they pushed us down and we did end up tagging, say we closed out at 30, what does a 38 mark I had on there, or 34 mark. Say they push us down and we close out at 34.95, you get exercised, you have those contracts, and it turns around and run back up. Well, not only did you gain the 4 shares that you could get today, collecting the premium for December. But that money, you've already set it aside, and you just bought those contracts. You just bought those shares at 35. So technically, you're getting 104 shares for the price of 100. So, and that goes back to our death of 1,000 cuts. So, do we have any other questions? I never even looked to see how many people we got in here. Hey, we got 6 likes on the video. Looks like we got, at one point, we had 7 people in the stream. It's like I said last night. I don't care if there are 5 people in the stream. I don't, if there were 3 people. If I've got time to help out the community, and there are people, who actually, people who value it, people who want to know, ask questions, or just, soak up some of the information, because a lot of it just comes down to disseminating information to the group. Yeah, I see Marine Corps Brat still here. So yeah, every little bit of information I can get out to the community, I'm happy to do it. I'm happy to pass this on to everyone. Don't mind me. I've actually got 2 phones open in front of me right now. One is actually tracking my portfolio, and the other one I'm watching how long I got before my lunch ends and I go back to work. So, oh yeah, Simon, like, I'll open these up. I don't have a problem with doing these every day that the market is open, coming in between Claybro streams. Because I'm on Claybro's channel, I support the channel. I'm going to add tags and links on in my about for here. I'm going to add a link to his channel. Be like, don't forget to check out, because I'm going to get. I know I've already got one viewer, at least 1 or 2 viewers who are not on Claybro's stream. They may not be in the stream today watching this live, but if they go through and look and see, oh, this is one of the other channels he follows, so I know I'm getting followers from Claybro's channel, so of course any people I know outside his channel, I certainly want them to go over and check his channel out, because we're all in this together. We're all apes, and we're all bros. Because I'm part of Bro Nation. I've got the bro on my hard hat at work. I got the bro on my car. I've actually, if there are any people who aren't part of Claybro stream, Claybro is a streamer. He is perhaps one of the best streamers out there. And I've got my bro stickers. I got my bro Peach, and I got my ape. And I'm just looking for good places to put those, but I certainly support his channel every chance I get. So what are we looking at? AMC. So AMC did come up. We had buying pressure step in. Kind of ugly with some of these little reds in here, but the market's red. AMC's red, Prog's red, everybody's red. Got a little bit of pushback coming here. I wanted to jump back over real quick because we did talk about those verticals, and oh no, wrong page. Let me get these up because I am running short on time. So yeah, we're looking at the 35-36 bull put spreads. Bull put, vertical. We don't want 17 out, we want the 10 out. That was what we were looking at here. So our 35-36s are currently, with all this downward pressure, we're currently at looking at $35 per contract. This is 10 days out, so this is not this week, but the following week, and these are the bull put spreads. That, not financial advice, but if you had a couple $100 and wanted to enter in a couple of these, looking at the AMC share price right now, you can calculate out, if you know how many extra shares you want to get and want to know how far to ride them out, you could go in. It is risky because you stand the chance of giving up your out if you immediately reinvest that money. Oh, DD214, you're here, but work has 80% of your attention. Yeah, that's the same thing when I'm at work. I'm mainly focusing. I catch stuff here and there. Every once in a while open my screen, look and see, but a lot of times when I'm in chat, I'm an audio listener. If I'm driving somewhere, usually I'll load up my comment and I'll just tap and send. So yeah, anyone who's at work, just being an audio listener. There's nothing wrong with that. I actually got just a little bit of time here left. I actually follow a schedule of in the morning when I'm getting up and getting ready for work. I'm listening to TMI stream. When the market opens at 8 a.m., I jump over onto Matt Core's. As soon as Claybro, once his stream launches, I'm over on his stream. And used to be that I would find someone to listen to in between, but now that I've got my own channel, my lunches are kind of tied up with the stream, which I'm actually loving this. I love the community, and yeah, it looks like TMI just went live, so probably when I finish up here and I'm coming back from lunch, I'll probably be jumping on TMI stream, listening to him for a bit until Claybro launches for his afternoon stream. And I'm looking to, after I get off work, I am central with my time, so when Claybro's finishing up, when he finishes up it's 4 o'clock for me when he gets off the stream. After MC Moon's trade-in, want to learn how to be ready. Yeah, 214. Also, I will be adding in on the afternoon. I don't know if this will be during streams or during doing actual videos. I will actually be doing some content on building a long-term portfolio also. For those who don't know, my portfolio, counting AMC, I think I'm in 32 positions right now. I've got 4 or 5 ETFs that I follow, exchange-traded funds, and then I've got stocks. And I actually can show you, there are 11 sectors out there if you go off spiders. There are 11 sectors out there. To get a stock in every sector, it can overinflate your portfolio. So I've actually broken it down into smaller groups, and I will totally I'll totally look to putting some content out on that. But I've got to wrap this stream up. I am ready to punch back in from lunch and go back off to work. So everyone, thank you for coming in the stream. Looking out here, we had Danelle, we had Simon, Marine Corps Brad, Elizabeth was in the house for this, DD214. Thank you everyone for coming by and supporting the channel. If you can like, subscribe, if you want to repost, if you want to post this stream to social media, or if you want to post this channel social media, get it out on Facebook, get it out on Twitter, get word out for the community. I appreciate everyone coming by, and I will see you back on Claybro stream later on. And don't hesitate to ask questions on Claybro stream if I don't see them. Sometimes I do hear Claybro mention something towards me, but everyone have a wonderful day, and I'll see you on Claybros.